All right, folks, I'm here at Blackpool Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Blackpool Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above. All right, folks, I'm here at Blackpool Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Blackpool Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above.
Hello everyone. Welcome. Good to see there's a few people in the chat. Today's FOMC day, so the stream's going to be relatively short. The trade this morning was already thought out and activated, but I actually passed my challenge yesterday. So phase 1 complete. That's all I needed to do. So yeah, that's done. And let me just show proof of that right over here. As you can see, wait, let me just bring it up. Yeah. As you can see, right there. All right. Daily loss, didn't hit it. Max loss, didn't hit anything. Profit, 5.07%. I only needed 5% for it, so that's a good day. I'm happy. I had 8 trading days because I was generally trading while I was streaming, and then 21 days had passed. And yeah, that's basically it. Done. Quite happy with that. So I'm just going to remove this and then stop that screen and present the this window. There we go. Okay, now today's, like I said, is a very interesting day because it's FOMC day. It's a big day. I'm waiting on my verification still. Otherwise, I would have taken another entry yesterday. But I'm waiting on my verification account. Looking at the dollar in the moves that were made. All right, let me just hide all of this stuff because you don't need to see that for now. All right, looking at the daily, we're looking like we're targeting short. This consequent encroachment, so on the high time frame right here, so 50% of this candle right here is right there. Let's add that in to the high time frame bias right there. Up, consequent encroachment is quite likely, and it's just touching into the fair value gap for this. Oh, there's some comments. Let me make this one bigger right there. Any tips or tricks for ITC? I don't know the ITC method at all. Don't know. If you mean ICT, then yeah, I'm all about ICT. That's literally the only thing I trade. As you can see on the high time frame right now on the dollar, we have a large fair value gap on top. We have buy side, and this buy side was just taken. This big buy side over here that was just taken, hence producing this short move that we're currently making right now. So if you think about it this way, we have a large leg, and in any large leg, if the price takes the one side of it, you're then aiming for the other side, or at least 50% of the other side. So you can see that replicated. If you think about this right over here being a large leg over here, as soon as price takes out, this low over here, which is only taken out over here, then the next leg, you can look at that and it will get to, is that 50%? There, perfect. right there. You can look for buyers into the 50%. So you can take both ways. You can follow trend, you can counter trade trend, you can do a lot. Okay, now just with this high time frame right over here, we've got an imbalance on the top. We've got a fair value gap that's just set up as well in the previous day, heading downwards. So that's quite a relevant point to add to our charts over here. And let me just put that into a higher time frame. Done. Okay. And ultimately, if we are seeking the lowest point of the sell side in this down, then we'll be looking at the next lows, which are these equal lows right here. That will be a big point, but that's for like long term, unless they want to like move it, rip it down in like 2 days, right? Which means that basically no one will be part of that move anyway, unless you're a long-term trader. I'm a day trader, an intraday trader. So what I look for is little keys to tell me what's kind of happening. Now going down into the shorter time frame. Let's go to the 1 hour. Take the high time frame away. On the shorter time frame, this move today, right here from London, it's very simple. If you use my 11s, right? Those of you who've been with me from the beginning know the 11s. There's the 11 o'clock provides very, very interesting times to trade, and normally it's within like some kind of kill zone. And you can take movements off of it. So this one on the buy side has not been taken yet. It's come down. This 11 o'clock was taken, and then it sold down into the next days, and it continued going. All right. Now, if I add the NWOGs and dogs into this, we came down underneath the white one over here is the new week opening gap. We came down, we tapped into the new week opening gap on Tuesday, and we've come lower. Now, this over here has created a little bit of a, not volume imbalance. This is the new day opening gap for Monday. And then Tuesday comes into that and then goes all the way down. And now today, from the low, from this liquidity being taken out and the new week opening gap, it just reached underneath that, and then it went straight for the opening. Now I'm actually expecting things to go a little bit higher today, because I'm expecting shorts on everything. So my bias is actually dollar long. Could be wrong, but ultimately we've already reached an objective, so my trading day would already be done. Going over onto Euro right now. Let me just show you. So my whole trade idea, my whole plan, and this is just a fooling around one, so let me delete that. The whole plan today was, as soon as I was actually hunting this at 8 o'clock. I was looking at it. There were perfect equal highs over here. That was sniped. Then we had a market structure shift. It came back, but there was no fair value gap or anything. And it went lower, and then there was 8:30 open, which took a whole bunch of this stuff. And then if you look on your broker chart, there's an overlap over here between the candles. Okay, it's not presented here, but the idea was that there's a void right over here, which is also not presented in TradingView. You have to do it on your broker. So there's a little void in price. There's like no price action here. So I'm expecting price to come up to here eventually. So it came down, and then my entry was just in that, at the height of that void, to then seek 50%, or ultimately was only at 2.43, but ultimately seeking the next the next end dog, which is right here. So I'm expecting price to come down here. There's a lot of stuff on the sell side. All of this over here, that is all amazing. The build up, I call that, it's like nesting in a way. No, 11 a.m. in New York time. I set my charts to New York time, which is, I think, minus 5 on the chart. Let me check. Time zone. Where's New York? Here. UTC -4. So I live in Australia, in a state that does, what do you call it? Daylight savings. Now, America also has daylight savings. So mine changes from UTC -5 to UTC -4 times a year. So I have to constantly be changing the time that I'm trading. It's like ridiculous. Anyways, so my expectations for it to come at least to here, but ultimately there's a lot of unfulfilled potential, especially if you see right down here, there's these equal lows over here on Euro, EU, sorry, 1.07247. I'm expecting that to get hit. If I add the, not the weekly, yeah, the NWOGs on top of it, okay. So these are the weekly gaps. We've just come into this weekly gap up here. See how my trade yesterday panned out beautifully. Okay, it was absolutely stunning, this whole move. Was this yesterday? Yes, Tuesday. So it came in here. There's a whole big build up. I took a little trade over here, and there's a little bit of a fair value gap. I took that right over here. I took it down to these equal lows. And then the next trade I took, there was this is the 1 minute, yes. So on the 1 minute, on the broker chart, this candle here is blue. So for me, that was break one. As it broke two, I consider that a market structure shift. I was actually in this trade right over here from the weekly, and then I had my stops just over here, and I was targeting these two equal lows right there, and they were hit perfectly, and I was done. But you could have taken on the 5 minutes. There was a fair value gap here on the 5 minutes, and you could have taken it to go to eventual. This line over here represents the 50%. I just don't use that much, 50%, and then started going and then consolidating for the day. Same things happened today. We've come, created equal highs. It snapped that, created all of this beautiful downward price action down to 50%. 50%. If you think about from where price starts in the day, okay, from where price starts right there to 9:30 open, which is somewhere here. So where's 9:30? 9:30 right there, up there. 30, and that's the open, that candle right there. All right, that is 50%. It could go gone further, but I don't like trading further, as in into the 50% of that mark, just because there's a high tendency for price to respect it, as it does right here beautifully. There's a low right there, respects that beautifully, and then starts coming up. And that's why that trade that I had on before, the one that I was playing around with, is we have this section of price action here. It goes higher, it goes lower. Then you have in that little section over here, this up candle right here, that is your breaker. And then there's a fair value gap nestled within that. So and on the broker chart, there was a tiny little imbalance right in there. It's a tiny little volume imbalance right there. So for me, that was high confluence for a buy, to put that right there and then put that in and then target actually the previous volume imbalance. So that was like basically the whole idea that I had. And that's what was on the chart in the beginning. Very, very, very simple. My trading method. We have buy side and we have sell side. Why is buy side there? It's 8:30 candle. Okay. Now, price targets, sell side is set at 9:30. Okay. The high is here 9:30. The lowest low there. It targets that. It has a shift in market structure and then starts retracing to, or not retracing, but seeking the opposite side liquidity. So it could come straight to this point here, or it could go to that void, or ultimately it could go higher. Depends. and a few things. Anyway, so let me just remove that because I'm not actually in that trade. Okay, my ultimate expectation though is for it to come down here because we have a whole bunch of end dogs as well on over here that's unfulfilled. To me, this one over here is unfulfilled, and that's a very interesting thing. Okay, when you have unfulfilled end dogs and you've achieved a weekly opening, see how all of this is nestled underneath, all of this is over here. Now, if I remove that, the weekly and the end dogs, it just looks like price is just continuously going up. It's consolidating and going up, and then something is happening. All right. If I put in my 11 o'clocks for the day, so let me just remove this here. That 11 o'clock time, okay, price is it's just above the end dog. See how it's respected. The reason why I use this time, it's respected beautifully. There. Like it doesn't get any more clean. Goes up, breaks down, comes down just to that and goes up again. I mean, it doesn't get more clean than that, right? You can look at the next one over here, 11 o'clock. Okay, price does this and then respects it, comes lower, creates. So this could add confluence to those of you who are trading the Judas swing. So the Judas swing is you look at Asia. Asia's between 7 right here, 7, the highs of 7 and midnight. Okay, in ICT's teaching. So midnight is here. What we're looking for is we're looking for some kind of a Judas swing for it to then start making its way to the opposite side in Asia, right? My stop loss, it can vary. I look at price action for my stops. So I don't necessarily have a certain pip range that I use. I look at structure, and structure sets everything. So during this time over here, we had another if you use trend lines and stuff like that, I can understand. Okay, let me just make this a big 3 over there. Make a little copy of that. Okay. Now price over here. Now there was like it does this. It tends to range up. It sneaks out equal highs and comes low. So this is a classic London thing that happens. It then takes this and immediately transitions to start going for the other side of Asia. All right. Now that over there between 2:30 and 3 o'clock is your entry, or 3:30. 2 o'clock and 3:30, there's an entry. So that was sell side. Why I say this is because I have a thing where between 2:30 and 3:30 is going to be the entry for London, because you're looking at liquidity from 1:30 till 2:30. Okay, and then you can see the price does this. It breaks structure completely. Again, creating another breaker pattern. You see this very, very clear. Well, it's not super clear, but if you see this little price action over here, okay, what's happened over here is price has gone lower than that. It's gone that box. It's gone higher than that box. Then what you do is you look at the last blue wick candle over here. That is considered a breaker. Now for me, as soon as it did this and it breaks up even further than this one over here, in my thing, I have a confirmation rule. I have a break 1, break 2. So over here we've got the first chance of it changing structure. Right over here is our second chance of it changing structure. So sometimes it'll just continue going down, but as soon as it breaks that, I'm then looking for imbalances in price. So we have fair value gap, and you could take a long from anywhere in here with your stops underneath. That would be a for sure stop placement, and you can seek the buy side, which is there. Ultimately, it's above Asia, and above that is these two beautiful equal highs right over here on the 1 minute. So that is again above the 11 o'clock point that we're looking at. Okay, so this is a whole bunch of like confluence and stuff that I add into my analysis, a lot of moving parts to the puzzle. It's random, right? Again, this 11 o'clock over here, if you look back, Asia's created, same thing. We have 2 o'clock. If you look at the bottom of the screen, okay, we have 2 o'clock around here. It snaps that. Asia's highs are right here, while all this beautiful equal high liquidity right over here. Like, I mean, this is way too perfect. All right. So you'll be seeking those highs within a price. So sell side underneath here, buy side, it snipes it. For me, this little fair value gap right over here, that would have been my entry with my stop just there. And I would have, so my first equal would have been here. So that would have been partial. And second would have been at complete at target up all the way over here. All right. So if you look down here, that's probably like somewhere around a 2R, almost 2R. And then the buy side is 4R probably. The market, it loves doing things precisely. It loves doing things precisely. But what it does there is it does a little bit of a fake out. So if you look at GBP at that time at the bottom, okay, if I see this happening in price, if I see that my entry is going like this and GBP is creating, so we have a low on Euro USD and we've got a high on GBP USD. That is SMT divergence between the pairs. It's showing me that dollar wants to go down, and yeah, then as soon as this structure over here changes, you could get in again at the little fair value gap and go higher. But I generally don't trade London, I trade New York. So looking at, let me just remove this. Looking at the high time frame objectives right now, okay, on Euro. This is on the 1 hour, I'm looking at the daily. It's basically inversely correlated to the dollar. We have sell side below here, consequent encroachment of that little wick over there, and then this is the what I call ultimate sell side. Before, if it gets taken, you know the price is going to make its way up and then come down to seek all of this. On the other side, we have a little volume imbalance that went in. This was my trade yesterday. It went into the volume imbalance, and I was looking for it to go short, and it did. And then today, it responded perfectly from this higher time frame fair value gap over here, higher time frame fair value gap, and it just literally tapped into that and then hammered down short. So that was literally the trade. And then I would expect it to seek this buy side, yeah, for the longs. So again, let's look at the 1 minute quickly and see that trade that I had on before to that little volume imbalance. Yeah, perfect. Fair value. I went straight to it. So it's taken sell side, changed structure, and then gone for buy side. Now looking at the dollar, where are we at? There's all these equal lows were snapped down, came down. Yeah, that's the 1 hour, 1 minute. These equal lows have been taken out. There's equal lows just under here as well. There's not much happening there. But my time for trading in New York is between, or somewhere around, okay. It can be just before, which happened here at 9:30. But my time for trading is between 9:50 and 10:10. So just in this little small bit of time right there, that's why I had that long position in this tiny small bit of price action between 9:50 right over here and 10:10 right over here. This tiny little bit of time. What happens? Price is showing me it wants to go higher because it's broken this. It goes higher, it goes lower, and then it starts fair value gap. And then that little fair value gap and the breaker block over there I showed you before, that is respected beautifully. It just continues going higher and higher and higher and higher. Up to this little void, up to the little price action right over there. And it's the buy side was 830, remember? We've just taken that buy side. And so that trade would have been stunning. But unfortunately, I would have passed my challenge in one trade. Anyways, unfortunately, I don't have my verification account because yeah, it's just interesting. it's in review right now, so I'm just waiting to get the details for the account, and then we can then pass phase 2. All right. As I said, ultimately today, during FOMC, I'm expecting these lows over here to get broken and for it to go down here. That's what I'm looking for. If it goes the other way, it could just completely fill in this fair value gap. Might go straight to this little breaker on the daily. No breaker, an order block on the daily that it might go to and then retrace from. But all of this liquidity here on the downside, the buy side's been taken. See here, the buy side, it all gets taken and it's left all of this beautiful price action before. And then this is the weekly here. That's the weekly open for this week. So if I put that over here and I take away higher time frame for this week, this is where the week opened, went slightly below, created the wick so far, and then it's creating the body right now. Now it's going to be interesting to see how price reacts. Normally, the low of the week is created on a Tuesday. So that's why I had even higher confluence of this going short in yesterday's trading, because I expected that the highs would be created in London, which it was just over here, and then New York opened, and then there was this beautiful equal highs over here that got created. It got sniped and then just headed lower. Classic ICT. Classic. And yeah, so today is FOMC. Generally, I wouldn't trade that news because when I think FOMC is at 5 o'clock in the morning for me. So that's in 3 hours. So FOMC is happening from 11 till 2 at 2 o'clock right here. There we go. It's happening. Can you see that? Yeah, it's happening right here at 2 o'clock. Okay, and that's a big movement in price. Zay first place. Thanks, my man. It helps me pass stuff, helps me make money. So I'm pretty happy with it. If you don't use it, that's okay. But for me, it helps me in my bias. I understand price better that way than I do any other way. I tried other forms of trading, and I just find for me that it just works for me. Okay, we all have our own opinion and our own thing and our own way of doing stuff. Anyways, going on to US 500, same thing. Okay, there was a perfect little breaker in here. You could have taken a trade right down to there. It was a 2.9. But again, we have 830 in price. What's the highs over here? Highs and lows. It targeted sell side first and then had a market structure shift to go for the ultimate highs over here in the 1 minute. And done. That's literally your trade between 950 and 1010. Okay. Creates that little piece of price action right there is beautiful. Right here. I mean, look at that. Just comes in, and then bursts off. So yeah, that's just really nice to see how these things work. Then going on to GBP, this level, what is this level over here? Let's have a look. Yep, that's consequent encroachment. So this wick over here, really long-tailed wicks in ICT, generally halfway between that we have consequent encroachment or CE, and the long super long wicks are treated as gaps. Okay, like the algorithm treats them as gaps. So price can respond from there and go to there quite often. So in this case, what you've seen right here is on the daily is represented. So price respects the consequent encroachment, changes price, goes up, and then it's come down. It's literally just tapped it beautifully and it's going higher. I don't expect much strength though from this because there's equal lows down here. You have the weekly opening over here and sell side down here. Just boop at what? 1.21258. That's, I think it's going to, as I said, I believe that dollar is long and everything else is going short. But that's just my opinion. This is not financial advice. This is just how I would view the markets and see it. Let's see what the dollar's doing right now. It's come just underneath all of these lows over here. Nice. The lows created where? 830 right there. Sniped it, sniped the lows, and then something's happening. What's happening? Euro's going down, GBP is going down, US 100 is going down. But usually during FOMC, there's a build up in the range. So there's like they start creating a range that they're creating. So it could be a zigzag pattern that goes either up or it goes down, and then they take one side and take the other side and then go in its real direction. Hey PJ, how's it going? Nice, bro. It's good to see. Good to see. If you're confused with what a VI or a void is, what I call void is this is a void right here. So that's like a magnet on price. Okay. This void over here is where there's literally no price action whatsoever. You have the body, no wick. You have the body, no wick. It respects that beautifully and goes higher. Now, all this other little price action here, these are volume imbalances because you have wicks on them. Okay. So this volume imbalance, tap that, went up. Created a void in here in price. So price needs to go through it, back to it, through it, and then we go again. Nice. This little volume imbalance over here creates it, goes down. And a whole bunch of volume imbalance created over there. There's a little fair value gap right in there, which you could have taken a short from. And if you were strong, for me, I would have actually used this little volume imbalance right here as my entry if I was trading the US 500. But ultimately, I expect it to come down to these equal lows that were created right here at the 930 open. But it's going to range, I think, because of the FOMC event. And yeah, let's go look at on the 5 minute right there. We'll see how price respects this and what it does here. Look at the dollar. Going to respect the same. Yes. A lot of chop in this range. A lot of chop. What's behind it? Yeah. We'll see how price respects this and the fair value gap on dollar. If it continues going down, then I'm seeking sell side, but I think that buy side has a very good not good, but there's equal highs sitting over here that were created in London, and two perfect equal highs on Monday that were created. Let me check, because dollar is correlated or inversely correlated to the dollar generally. If gold is long, Australian dollar should be seeking buy side. Right? In my opinion, oh, that was beautiful. Australian dollar. Look at that. So over here, I predicted that price would come down, touch this range. And guess what it did? It went right there, didn't take out this high, and headed straight down there. At what time? Australian session. Okay. This was on Monday a couple of weeks ago. I said that that there's a negative order block over here, and the buy side's over here. It needs to take buy side, which it did, and it left highs over here. But it needs to take buy side to seek sell side, and did that beautifully. Let's go look at gold. Let's remove this. Go into the 1 minute. I haven't actually done a lot of gold stuff. I've been back testing it, and it works the same. It literally works the same. So 8:30 we have buy side, and we have sell side over here. After this sell side is taken, 9:30, I'm expecting a change in shift for it to go higher and seek that. But on this day, the end dog was all the way down here. So I was expecting at least 50% of this price. Where's the end dog? Oh, here. So it came down, that huge leg, 50%, beautiful. And yeah, if you saw a couple of streams ago, I think I was doing gold. I said that my whole thing on gold is that it's going to go lower. Now, of course, we can go to the higher time frame, and we see where we are right now. Okay. We have just taken the buy side of that humongous candle, okay, and we're seeking lower prices. Yeah, I am seeking lower prices. The previous leg over here, this whole price range right there, that was taken out. Okay. Remember what I said about a big range of a leg that gets taken out? As soon as that happens, which happened, when was it? On Friday. Okay, Monday went higher and then started selling off. I'm expecting it to go lower and at least come to 50% of the range. Fair value needs to be offered in this whole range over here. Fair value, which is just here, needs to be offered. Today, past this point in time, I wouldn't actually trade, because the markets can be manipulated quite heavily on FOMC days. It has a tendency to do something called to seek a profile called what's called seek and destroy, or search and destroy, where you have liquidity that is built up on the one side, and then so let me actually show it to you. I'll show it to you in price action like this. Okay, this is like that's why I generally don't trade Asia. Okay, it's because you're like, oh, there's a whole leg over here and price hit this. I'm expecting this to hold and for it to go lower. What happens is it's slightly higher, and then it stops you out. And you're like, oh, well, then I'm going to go the opposite side because now it's going along. So now you're seeking to enter somewhere over here, and it takes out this low just over here. So you get sniped on both sides if you enter. Then what does it do? Then you're like, oh, okay. Now, even if you got in this long, I'm going to go long. what happens is then it snaps you out again, and then snaps you out on the buy side. So it's like there's days that you just get this mess over here, even though right in there you had a beautiful range to the buy side. NASDAQ. Let me actually go to my 30. I'll do NASDAQ. Where are you right now? The daily. We've taken the high over here, and in this leg that we're in right now, again, I'm short. I'm short the whole market. So in this range right here, it hasn't come back to give fair value. So I'm actually short. I'm short NAS. I'm short everything. Because I'm expecting price. So over here. So if I just take this away and I literally chuck on all the stuff that I have on the market over here and chuck into daily. Okay. Now there's a lot going on here. I'm sorry for all the lines. Okay. I have end dogs, new day opening gap. I have new week opening gaps. I have high time frame analysis, which is where we are right now, and I have my 11s. All right. Now those other lines that you see right there are what's called ICTs. I call them ICTs institutional levels, which are it's basically like round number theory. If the Fed increases interest rates, right? What does that mean, Lucas? If you think about it, if they increase interest rates, what does that mean for their economy? What are they trying to do? While you answer, I'm going to carry on here. So these are round number theory, which is 3. Why is this one? Oh, that's where price is right now. But 3, 9, 4, 4, 1, 4, 2, so on and so forth. In between that, you have the 0.2, 0.5, which I actually don't do because I just reference the 0.2 and 0.8. Because those to me are the place where price, like here in the 0.5 over here, there's been lots of chop. And I've just, in my experience, I've just gotten mauled in that 0.5 range. Even though it was a good place, the 0.8 is where I look at it. And if it goes below, then I'm like, okay. Anyway, so it's the ICT institutional levels over here. Now, as you can see, price respects all of those levels beautifully. It goes up, comes down to level, bounces off the next level, comes down to the next level, bounces, 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 bounces. You can do that in your own charts and your own research. So I'm just going to remove that quickly and go look at the high time frame analysis for this. So here, ultimately, there is on the sell side, it's been offered beautifully. Okay, you don't have much. You don't have much sell side down here, but in the leg that where we are right now, it's been bouncing up, yes, and we're targeting. If I just remove these two over here, we're targeting the high time frame fair value gap, and that little price right there, 4015. This is USD as well. Okay, so let me explain this. If the normally in the markets, if dollar USD goes up, everything goes down. Okay, sometimes there can be a cracking correlation, but if dollar goes up, everything goes down. If dollar goes down, everything goes up. All right. Now, why did we have the whole COVID? Not COVID. After COVID, why was there this huge, massive leg? Because the Fed reduced their rates down to 0. Okay. And effectively were printing money. So they were devaluing the dollar. Therefore, it was just on a bull run. like for days. Okay. With an increase of rates, which started over here. Okay, they started increasing their rates and the market's been coming down. All right. So ultimately, for both NAS, as you can see the same thing represented in NAS over here. Okay. We have the COVID crash, we have printing of money and no interest rates, and then interest rates are introduced. What's happened? In this big monster leg over here, we have come to 50%. We haven't come below there. I still believe that price is going to go. Doesn't matter from where it comes from, but I believe that price is going to come here. It needs to value this section right there again. So there's a lot of downside on my level, on how I I think. US 100. So as soon as, sorry, I'll get to you, but as soon as the Fed increases rates, other countries have to do the same thing. So as you, if you've seen in the euro, they decided, okay, it was yesterday or the day before, we're going to increase our rates. So they've been increasing their rates. Now what's happening today? Today the dollar's like, well, we're going to increase our rates. So everything else is, I expect it to come down. GBP, I expect on the higher time frame, they increase their rates, and then because dollars increased their rates, I expect it to come down. And it's coming down beautifully. Now, the interesting thing between GBP and euro is that in this little section of price action here, GBP has pushed past those highs over there, and euro on the daily, okay, right over here. Where did we go? GBP, that was that high, that was that high. Euro. The euro is slightly weaker right now than GBP. This whole leg from the bottom to the top needs to have some kind of fair value of some sort. So right now we're sitting in a range. If you look at the top to the bottom, the highs to the very, very lows, we've just hit 50%. And there's a whole bunch of stuff happening. I wouldn't know how to set it for the US 100, as I don't trade the US 100. Sorry about that, Samo. Here we have Lucas. Okay, so Nasdaq short today. On where's Nas? I will have to actually open Nas in a different chat. Symbol, let's say Nas. Look at it. Daily's gone higher. It's gone up above this over here. Where are we in price? We're lower, we've gone lower. We've had a massive bull run up. For today, as I don't trade it, I'm not necessarily in tune with how this market moves. Ooh, that was beautiful. Right there. That would have been a nice entry on Monday. We've just taken out highs and there's been liquidity built up. Buy side here, that's just been taken out and pushed back. There's lots of sell side to be had here. That's been taken. Like the way that price is, right now we've just taken these, but we have broken structure down. It hasn't offered fair value in this higher time frame leg, as it actually has offered fair value. Just offered fair value. It would be 4 hour. If you're seeking a higher time frame analysis, there's a fair value gap over here that has just has not been seen to yet. Is that a void? As I said, I don't. Let's see. From that open, there's a void in price over here. That's a big level on the buy side. That would be a big level for it to seek if it were to continue going higher. Price in, highs, snap the highs, went lower. Lows, snap the lows, went higher. Lows. I don't know, I'm bearish, eh? These lows down here. These lows over here at 10,684, I think need to be seen to in the longer term. In the shorter term, how does this beast move? Created this. Those lows would need to be taken out. Yep. The seek buy side. Ultimate buy side's up here, which it has just taken. I don't actually know. Like, this move's different. Let's look at it. Let's nail it down to time frames though. Let's look at the time frame. Go into the 5 minutes. At the time that I trade. So 9:50 and 10. Just right there. Yeah, it moves different. In that price range, I would expect it to, in that time, I would expect it to do something. Let's look at the previous day. 4 o'clock. I feel like I'm so short NAS. If I'm looking at this on the 1 minute, because I use the 1 minute reason. These equal highs have been taken, okay? They have decided to push it higher. All right, I expect price. There's a whole bunch of liquidity down here and equal lows at the bottom over here. And equal lows just down there as well. But I don't know what time that this moves. Because this 1, 2, 3, that needs to be, this whole candle structure would need to be taken. If it's not taken, it will respect that. This fair value gap here. Means you could be looking right now at a potential downtrade. Potential. But because it's FOMC, analysis doesn't tend to be spot on. Yeah, dollar's bullish. You got a whole bunch of equals over here. It's funny. Price has just come snap this low. It's gone higher and it's broken this structure over here. I'm expecting it to go higher. You said 10. I saw someone mention the chart 108. There's also lows down here, equal lows, and all those fair value gaps. High time frame, yeah. It might not be today. I mean, price not going to just shoot up there from now. But if you look at the expectations, okay, do you see what's happened in dollar from that point that I said right there? There was a bounce off of it. Interesting. Funny. So expected, come down, fair value gap up there. Yeah, they're just hovering in the section. So I don't actually expect price to do much. But ultimately, it might be actually during FOMC that they come and seek these lows right over here. During FOMC on euro. And then US 500 would be the sell side's, it's obvious. It's right here and right here. And then everything else is on the higher time frame. So we have all of this price, especially under here. That's a big buildup of liquidity right there. And if US 500, if I am seeking sell side on US 500, I'm expecting that NAS is going to seek the sell side as well. So this would have been, like I said, I don't know how this moves. But if we're looking at this buy side has just been taken, might be creating another equal high. I don't know how it moves. But as I said, this point over here is interesting for a sell idea if you're going to go. So like I said, I don't know how it moves. I don't know, but the that over there, you go short. Yeah. Like I said, I don't trade FOMC, and I wouldn't trade FOMC because it can be wild. But with this price action right here, it snapped the buy side and on the 1 minute. And again, going out to, let's look at the week. Where are we right now? There's equal highs over here on the week as well. It might actually be coming for that little area, that volume imbalance. If it's even on the weekly, this volume imbalance. If dollar goes up and the Fed hikes interest rate today, then GBP USD will be short. Everything will be short. In that case. But not GBP, dollar might be seeking this again to go higher because there's a lot of liquidity right up above here that it needs to look for over here. Like this, there's just so much over here. So much. Okay, so there's a reaction from there. We had our 1, 2. Yeah, I'm expecting dollar to go higher for sure. But it's interesting just tape reading. As you can see, the whole day today, they've just been setting and building liquidity in this range. Right here, in this range. This is like a consolidation zone. Yeah, if you look at the charts right now on your broker, US 500 is doing like that. Where are we? This euro right over here. From that fair value gap that I had already previously on the chart, as I said, buy side's taken right there, that 830 buy side, respected this fair value gap over there, and is coming down for equal lows down here. The highs set in London. Yeah, I don't know. FOMC? I don't know. ICT, his concepts generally, they can work well in the big the big days like FOMC and all that kind of stuff. But you need to be right now. The markets, you have to be super nimble in how you approach the market because it's quite volatile. Going higher, which means NAS. Let's look at the 1 minute quick. What is it doing? It's going higher. Yeah, like I said, this is not my beast to trade because I don't trade it. It came up in this leg, buy side. Came just in that beautiful 38% range right there. So 62% came in there beautifully in that leg to go higher. And if that's the case, then you'll be drawing that out there for an opposing move over there to here. Now, if I do that and add that into a high time frame, just above that candle there. If it's pushing, it would push just above there. And what's the time? $11, $12. You might be looking for that to be pushed, and then from this point over here come lower. And that'll happen. It might happen in the afternoon. I don't know. Does NAS work the same as ES? So we have the morning session lower, and then the afternoon session higher. It looks like it does the same thing. Look at Monday. The morning session goes higher, and then continues going higher. Interesting. And we have morning session higher, afternoon session into Asia lower. Look over here. We have morning session higher. You just continue pushing all day. Yo, once you get into a move like this, it just continues. I can see why people like trading this. Once you get in to like a short or something, it just continues from the right side of the market. So we have the morning session higher, and afternoon session carries on going higher. It's ridiculous. And then of course you get this chop. See what it does here. Price. Because NAS is pushing up while everything else is coming down. US 500. Expected that to a degree. EU. Setting up DXY. 1 minute. Pushing higher. this, we have the high, I mean the low, the high. Looking at that as your breaker. Expected going higher, higher. This one, yeah. It's FOMC. I don't expect much. This is a day where I would expect it to just, you just sit on your haunches and let it ride out and come back in the day after. Because all the big firms and stuff like that, they don't want to be wasting money. I mean, all of this build over here, it's gone lower, snapped the lows, and I would expect dollar to continue going higher. Like I said before, I'm bullish dollar. Go look at NAS again. NAS is pushing higher, but looking at what I've just done at the back testing, a tiny bit of it, there wasn't enough of a push. That massive push higher in the 15 minutes. It's a very interesting instrument. Massive push higher, come back into the fair value gap, and go for the equal highs that have been set. Huh. Lovely. What a beautiful thing to trade. Excuse me. But yeah, this is not my instrument. Let's go to gold. See what's happening. Gold's consolidated and it's going up, while dollar's also going up. That's interesting. If any of you got trades on, share them with everyone in the chat. Let me see where your entries and stuff are. What instruments are you trading? Let's go quickly onto. So this would be your end dog. Close that candle, so open that candle right there. Let's see what price has done during that time. Yeah, shifted. It's come straight to it. Yeah, this is beautiful. That's going bullish. Would it come down again? Where's the previous day? Here. Close of that candle to open of that candle. Whew, that's beautiful right there as well. Looking at that price structure right there. You go from this end dog to the previous end dog, you crash through it, you test it, and you go down. Love it. Equal highs up here though. Now what time was that? Of course during London. London crashes down, consolidates. For how many hours does that do it? 4 until 8 basically was consolidation. So for gold, your institutional levels are your hundreds. Let me see, do I have it here? No, I don't. So your hundreds being your Go 2000. You go down to 1900. It's just over here. And then you have the ones in between, which is 1920. Roundish. And then you have 1980 over there. So if you're looking into your higher time frame right here, okay, and you see where prices come from. So we have this one over here that gets tapped into. That's a big number. Now it's come down, gone through the next number, and then is seeking. Personally, it could come up higher and go to the 50 or somewhere in this area over here to then seek lower. Let's see how prices respected that previously. Oh, doesn't want to give me the time frame. Let me look at this on the 15 minutes. 900. It's gone up to 920. It's gone to the 50. Then from the 50, it's come back down. 50 again, to come back down to 880, 850, 820. Almost a round number here at the bottom. Gone back to 850. Gone back to 900, 880, right there. That was like a beautiful going back up. Let's look at this. Please explain about SMT of Euro USD. All right, Vikram. So there's, hold on, I'm quoting 100 pips, one German 40. Lou Wick is calling 100 pips on Euro USD to the upside. Okay. According to the upside. Let's go look at that. 100 pips to the upside. 100. So from 78, well, let's just say 79. $100 pips. You mean you're expecting this price over here? Good. If you look at the that's an institutional level, but it could also go from here. It could go 100 pips to the sell side, or it could go both ways. I like your prediction. I like your prediction. What else do we have? Is NAS still bullish? Let me go see. Go look at that. The NAS. So it's taken these equal highs. It hasn't broken structure yet on the 1 minute. Go look at the 5 minutes. Definitely wouldn't have broken structure, no. It's not bearish yet, but it's starting to form equal lows down at the bottom. Please also remember that lunch is coming soon as well. So these equal lows over here. Like I don't actually know. You trade this, you'd retrade it, because that's massive numbers here. Let's go look. Seeking these equal lows over here, we go look at US 500. It's also going down, which means dollar creating equal highs. Yeah. Yes, so here we go. Please explain about SMT of Euro USD. And so there's two forms of SMT, okay, that we look at. The first form is literally having, you can't see it here, but I'll put this one over here. GBP USD is the line chart. It's not RSI. It's actually the bodies of GBP USD. Now, SMT divergence is very, very simple in this case. All right. I go over here and look at these prices. You have the bodies over here going down, and you have the bodies going up on GBP. That is a divergence. Now, you don't just use that. You use that from a point of interest. So right there, there's a fair value gap that has been unfulfilled. Or could have gone right back to that fair value gap. Yeah. And then you see some kind of divergence, like just happened, SMT divergence, as you can see. That's going up while this is coming down. So what that's showing you is that dollar is about to switch up. Okay, whether it's going to go long or go short, it depends on where you are in price. The other form of SMT divergence is on the DXY itself. So if you can see here, I've got two. One is this one over here is GBP, and this one over here is Euro. Okay. So what I'm doing is I'm constantly referring to price and seeing what's happening over here. So as dollar right now on the minute has gone up on this, I expect GBP and everything else to go down. Okay, so let's just go back this into the 1 minute so you can see the comparison. As dollar from here goes up, I expect price to go down. All right, because that's exactly the opposite of each other. Now, SMT divergence is when they're both moving the same way. Now that you don't need to have GBP, you can literally just have one like this. Okay. Now let's go look at points in price where this happens. This is not looking at the lower lows and the lower highs. I mean the higher highs because they're opposites. You're looking at the opposites now. You're not looking at the same one. So as you could see in Euro, I'm comparing the low to the low and then the low to the low. On DXY, I'm comparing the low to the low and the high to the high. That's how I do it. Now, when they're both moving the same way, that means that there's divergence. All right. So if I have lows moving up and highs, no, that's equal. Let's just find a place where it is. Lows going low, low to low. No. Lows, highs, no. No, it's good. That price works. High to high, no. High, high. No. Where I'm going. Doesn't we look at over here? We have right here, we have this going up, up, and it's coming down. No. Coming down, that's going up. No. It's very, very specific. And it's the 1 minute, so it's difficult. Yeah, right here. This here is divergence. So what we're seeing right here is this high over here, SMT divergence. So what it's doing is you have at that point over here, okay, you can see as I go back in price over here that it has diverged. So euro is looking really strong, and this is looking really weak. We've got on the other end, high to high. No. See if we can get it on the higher time frame. I'm sure that there will be points over here that are interesting. Yeah, right there. So we have on the 5 minutes, this low to this high. I mean, this low to this low. Okay. And if you see the same thing in price happens, yeah, you have this high to this high. So that's showing me that price wants to go in the opposite direction. That is the dollar divergence with anything crossed with the dollar. That's the other form. This one to this one. No. Takes a while. But yeah, that's basically it. Hunting for that in a time where you're expecting a shift in essence. So if you go back to all the big times, okay, like let's go to a big shift in the market. Let's go right here. Okay, that is very, very, very clear. We have this high to this high. Just draw it out like that. And over here, yes, it's slightly lower. How do we continue? This sharp range over here is showing me that euro is resisting going lower, even though dollar's pushing, which shows that that's like a SMT, that's a manipulation, which gets it beautifully into this fair value gap to go lower. Now you can see that same thing. I think it'll be in this candle over here, these ones. You'll see it at the time, 9:25. Yeah, it'll be somewhere here. That was the same. Anyways, it's interesting. You can spot it. I don't use divergence as much. Low, lower low, higher low. That's it, right there. This low is higher. I mean, there's a higher low there, and there's a higher high here. That's again showing me that dollar is overbought. Okay, which means that it's going to create a great back down. And what happened? 950 to 1010. It's like the time that I trade, and then it goes lower. So it doesn't happen always, but if you see days like that, you know you sorted. You sorted. US 30 looking to sell depending where FOMC pushes price, looking at a 32750 as a point of interest for the sell. US 30. Gold is up 2000. Isn't that a bad sign? Let me look at gold first. Gold is up 2000. This whole narrative right now with the banks, all right? Oh, this is the 1 minute. Sorry, let me go into the daily. Gold is an asset that will, over time, should always increase in value. Okay. As you can see from the beginning of time, let's go into a yearly chart. The beginning of time on gold, okay, it's just gone higher and then retraced a little bit to volume imbalance right there, beautiful, on a yearly chart, and then gone higher again. Now, that's the theory behind gold, because it's what's considered to be a hard asset. Now let's go look at the 1 month. Basically shows the same thing. Gold's always is going up. Now the interesting thing about gold though is that it is a hard asset. Photos were snapped. Or equal highs. Goes higher. Yeah, that's right now. Everyone is buying gold. So if you think about this, the all the BRICS nations are all buying gold. So you've got like countries like China and South Africa and Saudi Arabia and everyone. They're all just hoarding gold right now. They're just buying lots and lots of gold. All the big banks are buying gold too. There's a huge debate on whether or not CBDCs are going to do something. Honestly, I believe that fiat will change to a CBDC type of environment. But what I expect trading to still be around, because business needs to be conducted between currencies. So every country will have their own CBDC unless there's a global currency, which then proves the Bitcoin narrative. But a lot of people, I think a lot of big institutions or governments are opposed to the Bitcoin narrative because it's not necessarily within their control yet. Gold long entry, 1943.7, stop 1936. Let's have a look at that. So long term, if you buy gold, you know it's going to go up. 1943 3.7. That was your entry. But there's equal lows right there. You know, if you have profits, bro, I would suggest you take them now. Because it's showing me that's just not this, and it looks like if this doesn't get respected, it was definitely going to go lower. Always take profits, even half the position. Where was your stop? 1936. 36.8. 6.8 underneath here. Entered here, you stop over here. How big is that position? You've already taken profits at the 1-to-1, I assume. I'm just assuming. If it breaks below 927, I will go short. 1927, sorry. 1927. Just here. You can see where you're going. You're a breakout trader. So as soon as it's about to break out, you use that as your leg to go to the long. You see, we trade opposite, you and I, Ali. I trade on, I see liquidity being set up, and as soon as it gets raided, I'm looking for a change in market structure. Okay, which happens just here. No, I don't know. We're inside of this fair value gap though, after a big impulse. At this time of day, I don't know, but I'll show you what I mean. Because it's on the 1 minute over here, I look at a whole bunch of liquidity being built up. And instead of trading short, what I do is I wait for it to change structure. So over here, it changes structure right over here. See this big bounce, it comes down and then goes bang. And then I'm looking for fair value. So then I'm looking at this fair value gap right here, and I would go long. It's like super tight. What's the spread on gold? Because I don't trade gold. And I would seek the immediately from here, my first profit target would be the first high that's right there. As soon as I'm in, that leg that we're currently in, that's my first profit target. My next profit target is wherever the equal highs are, and then after that, wherever the equal highs are. So it could be there or it could be there. And I wait, because all of these people that break out, I would rather be out of my trade by that time. Yes, Sav, I completely agree. But it does happen sometimes where it can give you a, like the SMT divergence can give you a decent entry. I use all Elbrook style trading. All right. Yeah. So you use the push and continuation in trending legs. Oh, MFX. I passed. So I'm just waiting for my verification now. Yeah. I passed yesterday. So now I'm just waiting for them to give me my verification, and then I'm sorted. We're having movement now. Dollar's doing something. Dollar's going down for these equal lows. So what is the time? The news is not out yet. You see how this is pushed for the highs over here? And dollar has not gone down there yet. And that right there, that, if you see on euro, that is like a push into the liquidity. It's to take these people out of the market. To literally take these people out of the market. They don't want people here at this price. See what dollar does. Dollar's going down to a VI. And it's been pushed from a fair value gap. A high, that VI over there pulled through time. This fair value gap over here. 1, 2, beautiful, down. Nice. That was a nice move. TB, I've got my account, but I don't trade FOMC, so I don't want to I don't risk it. It's not worth it. GBP doing. Now this is interesting. When I see this type of price action, I then start looking. GBP from this point in price is going down. So that's showing me that dollar is strong. Euro is going down, but all this little price action over here, yeah, that was just a pure raid to seek equal lows. So we could be doing what I initially, because we haven't taken this high. Yeah, FOMC, huh? It's a bit of a scary situation, FOMC. Like the price doesn't respond on the 1 minute as I would want it to. Let's go look at S. It's also coming down. There's a whole bunch of liquidity sets on the buy side now. And we're targeting sell side right there. That moves. Oh, beautiful. Rip them all. You want that. GBP, lots of lows. Yeah, I don't know. I'm feeling like dollar's going up there. I just feel it in my bones. Thanks, man. Vikram, I would recommend if you have like dollars, there's a nice trade manager that I use, and it's, let me go check. Just called Forex Trade Manager. Now it doesn't just work on Forex, it also works on the indices. I've tested it. So you can rent it for 3 months for $30, or you can buy the whole thing for a lifetime for $100. I'm not recommending, I'm not like advocating for products or anything like that. I'm just saying that that's actually the one I use. And it's a really, really nice trade manager in my experience. That was a beautiful, beautiful raid. Look at that. See how that right there is SMT divergence. That was stunning. But again, because FOMC, I wouldn't trust anything today. But classically in ICT, I know it's lunchtime. Yeah. This buildup of liquidity over here to push to the highs to raid the stop over here, that would be an entry. With your highs above there plus spread and 1 pip. Plus spread and 1 pip. That would be your entry seeking equal lows that have been set over here. But as I said, as it's FOMC, I expect it just to continuously raid, like stop hunt the whole time. So now you've got your stop over here. What it's going to do is it might come down. It might come down and push just past here and then come up and take your stop and then go down to take these people. I really don't trust FOMC. I've had too many bad experiences with FOMC and with all of that nonsense. Dollar's going up. Do you trade NC? I trade US 500. So my whole thing today, if I was trading right now, is I would have waited and I would have gone in as soon as all this liquidity here was taken. If you look left, that's the highest point over here. Okay. Now buy side, the initial buy side set on that leg to that leg over there. This would have been this first, if you see if you observe and go into price deep. Okay, we're literally going to zoom in. This is the 1 minute chart. All right, we have this for me would be a break one. That would be a break one. This right over here. As soon as price broke this point over here, I would consider it to be a market structure shift, which happened in this candle right there, as you can see, right there. And then I would be seeking any imbalances. Now this imbalance over here has been traded to. There's one that's behind over here. There's also a tiny one just inside over here. Okay. Now those are 3 points where if price came above there, my trade would be invalidated. Also, as it came down here, there's another one right there. My entry would be on the one, this one right here in the middle, and I would put my stops above here. And then I would seek whatever form of sell side that's available, which is these equal lows. And after 2R, I would already be out the trade. I mean, I'd be out half of my position. And then my target is the equal lows. So that's completion. Oh, okay. Let me just open it. The reason it's not there, man, is because the spread is actually ridiculous. Okay. Let me get it out. It's in the chart. Over here. If you click on which one? Because I had to. I also there was I had to like fiddle around to find it. The navigator. No. Where was it? I'll find it for you. I'll find it for you. Don't worry. Sorry, everyone. I just need to find this because it was something that was interesting. It's like somewhere different. Charts, profile view, symbols. Okay, if you go to view in your chart, click on symbols, which is underneath charts bar, and then open up indices, and then there's a little like dollar icon. Like all of them are probably going to be gray for you, just like they were for me, and you have to just click on it and make sure it goes gold. As soon as it goes gold, then you're sorted. Then it'll present to you in your little your create new chart bar. Northern Star. My Discord is ICT Twitter, which is which is not me. It's ICT, and he's also on YouTube. He's got a lot of free material. Got a lot of free material. For me, I only see Forex, exotic, and metals. Really? That's weird. View symbols. I've got Forex, indices, cryptos, metals, and stocks. But let me just tell you, it isn't worth to trade indices, bro, because if you go on the indices, the spread is right now is 1.5 handles. So if you're seeking a 5-handle move and you're entering market, it'll put you in 1.5 handles below price, wherever you're targeting. And when you exit, it will, you'll have an issue because as you exit manually, it'll take you out 1.5 handles. So in essence, you've only made 2 handles of profit for 5 handles of risk. I wouldn't advise it. Gold has only got 20 cents, 20 cents risk. Sorry. So it's like 1/5 of a handle on gold is the thing on this. But Euro USD and GBP and stuff, I think, have very, very committed, good good prices. Because like right now, I'm looking at it, and it varies between 2 pipettes and sometimes 3 pipettes, but it can also go to 0 pipettes at times. Yeah, so with this US 500, it's in my calculation, as I said before, that this level and this level are targets. Okay, that's where I would expect it to go. That's how I would trade, and I'll trade the same thing on euro. Euro, beautiful. DXY, pushing higher, because this is actually SMT divergence, funnily enough. And we were just talking about it. Okay. Very, very simple. Let's look at the 1 minute quickly. On the 1 minute. All right. We have price from here going higher. The lows then need to go lower. Okay, this is normal. Okay. But what has happened between this price and this price? We've had an extension right here, and then it just rips. All right. That ripped down that whole little section of price over there. But not the lows, sorry. The highs. Being a plank. Being a plank. My bad. Okay. These highs over here go higher. Price over here. Okay. It's going higher. Higher. Over here. Higher. And this is on the sell side is going higher, while this is going higher. This is SMT divergence. When you're on the dollar, when you have 2 lines going the same direction, that's SMT divergence. I want to see what's happened with the GBP at this time. Same thing. Actually, let's go look at the wicks. No. As you can see, GBP is going down, right? Quite a lot. Euro has pushed up, and it pushed up at a perfect time, right there, taking out this liquidity to then make a little schmoz. Take out all that liquidity while this is not going up over here. That there, divergence. Now there was a point in time, actually, when was it? It was like a few weeks ago, a few months ago. I think it was just after the Japanese announcement. What they did was they started doing something that no one expected, and then GBP just tanked. So all of the SMT divergence kind of theories were out the window. I don't like how smooth this is. I don't like the smoothness here as well. Even though it has diverged, it's a very, I don't normally use a line. It's just to show you how smooth it is over here. It's like how smooth it was over here, and then it went bang, 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 and it went higher. This, I don't like its smoothness. But it still needs to go lower. It needs sell side. Yeah, Jenny. It is. It's safer. It's a lot safer trading forex actually. If you have your analysis and your times to trade in, then I would say that it's a lot safer if like doing the traditional forex trading. Camulate any other entry. Other entry. See what dollar's doing. Look at that. The respect. I love it. This little volume imbalance over here. Okay, let's talk about this for a second. Right, on DXY. These are important. Again, this is important, and the fair value gap here is also important. Okay, 50% of your fair value gap over here. That's around 50%. If price wants to go further than that, all right, if it goes below this volume imbalance, I would have said sell, sell dollar, buy everything else. But because it did that, yeah, took lows, took sell side, and then took buy side, then came back. This right here, we've gone up, down. It didn't respect this breaker. If you're looking on the 5 minutes, what's happening? That right there, that breaker wasn't respected to sell off on dollar. The 1 minute here, let's have a look. Let's actually look at the chart. What do we have in this price range? Sell open. This little piece of price. 2, 3. And goes down, comes up. There's nothing else there. Whereas on the sell side, it's only sell side. And that's, sorry, I'm busy going straight into the charts and finding all the gaps. I've been there. We've gone this section, higher, lower, broken higher, therefore that right there. Breaker. Let's just look at US 500. Look at that. Came, rushed liquidity, perfect on the other side. See that? Beautiful. What's Euro doing? Euro. If it does not respect, as in if a body closes below here, I will be very confident that this trade is going to go down even lower. Do we have an IEFD right now? There's a fair value gap in here. But Naigi, exactly. I'm not trading at FOMC days. I passed my challenge. So yeah, it respected that candle beautifully. It's going to be interesting to see right now, the 5 minutes. Is there a fair value gap here? Not in the 5 minutes. Let's look at the 4 minutes. No. 3 minutes. No. 2 minutes. No. Not 1 hour. Blank. 1 minute. There's a little one here that was already seen too. That was stunning. For US 500, we're currently sitting in a volume imbalance. So if you see on the daily over here, sorry, the not volume imbalance, FVG. We're in the buy side FVG right now, which we've just come into. We haven't taken the high at 4015, just here, 4015.7. Haven't taken that yet. The way that it's shaping up is you just had this monster leg down, and then it's balancing out this whole leg. Now, because it's coming through here, everyone's going to expect it to continuing filling in the whole rest of the FVG. That's why, again, I'm short. I have a short bias. It's just like over here. See, there's a big fair value gap over here. Price comes in, goes all the way down, does its business, and then it ramps all the way back up. Really close. But it just doesn't get there, does it? And then it slams down hard, even lower. So all those people that thought they were safe. And it's funny that today's FOMC day. I'm really curious to see how this plays out. I'm expecting it to just tank like, I don't know. Everyone's long. I feel like I'm short. Just because, again, I'm going to go look at something that most of you probably aren't aware of. See where we are in price. Now, the US dollar, they will be increasing. They made a mistake. Okay. What is the mistake? Powell admitted it himself. That was actually the reason why there was this big move over here. Okay. What he says was they'd made a miscalculation on his currency divergence and RSI. So I'll get to the questions now, but there's Powell admitted that there's a miscalculation, okay, in where they expected price to go. So they're going to be increasing the rates. Now, if you go from this low to this high over here, and you drag that out, 50%, 50%, 50% went higher. All right, this is last week Tuesday-ish. No, it was a week before that. Wednesday, Tuesday, yeah. So it could have gone either way. It could have gone down or it could have gone up. But it went up because that's what he said. Now there's a fair value gap just above there as well on the US 10-year. But projections of where they said they failed to go to, okay, so then we go into the weekly for this, was 5.25 aroundish, okay, which is just at where these highs are, okay. The highs next to it seem like more right pickings for me. I don't know why, okay, but because he has predicted this range over here between 5.25 and maybe higher. I don't know. When's the last time we saw that price? Just before the 2008 crash. That bubble where the dollar crashed. All right. Now again, we draw it back in price and we go at when was the last crash as well? 2001, right? So let's go down. The last time price was there on the 10-year in the dot-com bubble. I mean the dot-com, the year 2000 kind of crash. Okay. 2000 came and the bubble, 2001, it just tanked. Everything just hit the bottom. Then they built it up again. Then we go back to the last time, which I think was 91. Over here, where interest rates were high, market tanked. All bubbles are the same. Right now, okay, there's a big bubble that's been built up, and price was almost at zero. It was actually almost at zero. Actually at zero maybe. Okay, and they just increased rates. Now 4.323 or 341 is not the highest projected rate that they're going to increase rates to. So if this is going to go higher, you can literally look at this chart right over here, okay? And you can see this is from Monday, the 10th of August. Let's look at DXY on the weekly. Go down. Go look over here. Monday, the 10th, around here. The same thing. The charts are exactly the same. So if Chairman Big Daddy P says that US dollar, I mean the US dollar interest rate needs to go higher to this point over here, okay? To this point, not this one, this point. If dollar reflects it the same way, where would we expect it to go? My eye immediately gets drawn to these two highs right here. That's where I'm looking. I'm looking at 120, not just 108. I'm looking further downfield and going back in time as well. Again on the weekly, this is a long time frame. It's like 1986 when they were strong, and then they transitioned over from the gold standard to the current banking system, and then they just started printing money for days, and they've been printing money ever since. And then they increased interest rates over here in just after the dot-com bubble, because they needed to save. They needed to save the people that had lost all the money. So then that came up again. And then what happened? Price came down because then they just started printing again. And then we've been going up now in interest rates. So it's a normal thing. You go into the 10-year, there's also the 2-year as well, USO2Y. Now that literally just pulled a 180. It was heading for the ground, and then you literally just see it go, oh, boop. I mean, look at that. Look at that drastic change in price. The 2-year is more reflective of it's more kind of more accurate in a way that's it's more volatile. And even that has not hit 5.25 yet. And the market normally prices in the moves before everything happens. In Forex, how this is reflected, okay? Just look at this. Dollar's just, the yield has just gone down and down and down to like it's zero. Anyway, US 500, how's that working? Yeah, beautiful level. One day, reset. Yep, dollar's going higher. So yeah, long term, that's how I do my projections. I mean, look, even on the weekly, if you use ICT's theories, even on the weekly, there is an actual void in price here on the 2-year. Where else do you see that in price? To give that confluence for those of you who don't actually trade ICT, let's look at voids in the market. Okay, right there. There's a void right there. Now, between those two prices, there's no price action at all. Price goes up, it comes back into it. Right here, people are confused about why price went there. They're looking at fair value gaps. They're looking at the wrong place. The weekly opening and closing right over here, that was your true target. Yes, the fair value gap. There's also another weekly opening on the 2-year right there. And looking at these weekly openings and how price is reflected on them on the weekly and also the daily, right there. So price closes here and opens slightly higher. Those are 2 bars right there. I don't know what ICT calls that on the 1-minute chart, but I use that in my trading. I don't just use voids and imbalances, so a void and imbalance. I use this price right here. So this price over here. Because it closed over here and it opened over here. That's a gap. Right? Of course it is. Closes over here, opens over, closes down here, opens slightly higher. That right there is a gap. Now adding confluence to that gap with those equal lows, price going down. I mean, it's actually scary. Well, it went down. Imbalance. Respected beautifully. Goes up. Void. Seeks the void. So he goes up, slams that void. I want that void. And then wherever it's going now. Jeannie, I've actually been I got into trading about 2.5 years ago, and I had no idea what I was doing. I was trying to use trend lines and I was trying to use all this other stuff, and I mean, I guess it works for some people, but I just wasn't getting it. It didn't make sense to me because I always had the question, burning desire in my mind about why is price doing what it's doing? It can't just be because of news. It can't just be because of that kind of stuff. I wanted to understand why price is doing what it's doing. So then what I did was I started studying ICT because I found him on YouTube. And that's why I have all these older ICT concepts because I've watched his older videos and I just couldn't understand anything. I was watching it. And I was like, I don't see it. I don't see what you're talking about. And then what I did was I spent, that was about a year. And then I spent 6 months just watching the 1-minute chart, not any other chart. I wouldn't look at the 2-minute, the 5-minute, the any other minute. Just give me the 1-minute chart. And I just watched the 1 minute and to see how price behaved during events, during these types of things. Like whenever I could, I'd just look at price on the 1 minute. And because of that, checking price on the 1 minute, that's why I generally do my analysis and stuff on the 1-minute chart, because I see the higher time frame in the 1-minute chart now. I don't actually generally use the higher. I use like a daily and the 1 minute. That's all. I was actually explaining this in the last stream as well. So if I have let's just say an hour of time, 6 o'clock is over here, and 7 o'clock is over here. Okay. Right over here, I see a large wick going to the buy side. Okay. Blue candle on the hour. How do I see that? Well, we have the opening, which is just over here. And we have the closing over here. This price from the bottom to up is a large wick. And we have a slightly less wick over here. That's what that 1 hour candle looks like. And I observe it on the 1 minute. After you've looked at charts a long time, you start seeing things in price that you've never would have thought that you would see. And then what is interesting was ICT then releases 2022 year model like mentorship. While he was taking his own ones, he did that one. He released that one for free. Now that was, it was good, and it basically just reiterated everything that he said before. He just gave a model. That was basically the only added extra to it. There were some other little goodies in there as well, but he gave that 2022 model, which is basically this, which just happened right now. That's his 2022 model done. Seeking the lows. All of this equalness taken up, down, easy. All right. Now, what is interesting is that because I was learning before and I was watching the 1 minute chart for a long time, I was trying to figure out my own model using the things that he said. So I was looking at COT, which is the commitment to traders reports. I was looking at all these things. I was trying to find all these things in price. Now you can literally break down price into any time frame you want, but I specifically started looking at 1 minute, and I started looking at how it reacts hourly within the 1 minute. So he would like his previous teachings and stuff, he would direct you towards like the higher time frame bias and stuff like that. But if I see that during, and I noticed the same things before this year, he started talking about specific times of like literally 9:50 until 10:10. That's your window. If it's not then you're looking at 10:50 to 11:10. So, and I was wondering why. Because it's how the hours form. The price manipulation, they want to create the manipulation within the wicks. So right over here, you can see this is 2 hours of price, okay? And they're taking it both sides. The manipulation happens all within it, and that's when you make your move as they are manipulating, so you can get in flow with it. So again, we have 11 o'clock over here, 11 o'clock open, which is right there, to the 12 o'clock close, which is right here. And there's a large wick over here. And remember, wicks are gaps in the algorithm, right? The tiny little thing over there. So that's the hourly candle there. And now we look at the next hourly candle. So we have the open, which is over here. And we have the close in the 1 minute. That's the next one. Now we have a little wick over here, and we have a wick to the downside right there. So now what do we have? We've got 2 wicks over here. It looks like price is forming a fractal. And if this is a gap and price has not come to fulfill that gap, which is your buy side liquidity, over here, that closes and starts seeking buy side. Oh, lovely. Then we have the next ones. It's fascinating. So once you literally just study the chart and start creating. Now I actually noticed that there were these gaps in price well beforehand, before he even started talking about them. And I saw that price was reacting off of these gaps all the time. And so that's why I now, even before he said it, I was using them as like a point of reference, but not just on this. I use it in the dollar. I use it in euro, but you can't see it on TradingView. You have to open your broker to see all the imbalances and stuff in price. So this would have been, oh yeah, you might be wondering why did I choose that candle for it to react off of? Why that candle? So very quickly, we have price, we have a break higher, a break lower, a higher high, then we have your breaker, which is right there. So if price broke lower than that, then it's a continue. Because it respected it, you're then looking at, if your entry was here, you're looking at taking profits. Well, you would have already taken, I would have taken it off over here already. Profits would have been taken off here, and then my next target would have been 4R. 4R, or the equal lows down here. Same thing is showed on this, in this price action over here. So we have right there, we have high, we have low, breaks it. This last candle section over here, downside, that's a breaker. So price coming in here, respecting that little section. What section is that? Again, we zoom in. That little candle there. That overlaps here, and this big one, it closes here and opens over here. That's a gap. Now it's created gaps as well as this. There's lots of gaps over here. Respects it, comes down, respects it. Beautiful. Absolute beautiful. Ah, I love it. I love it so much. Looking at that stuff. And oh yes, I was getting into that story about all that stuff. So with my story is that when I was looking at this and stuff, I had already lost a little bit of money, but I just wanted to study and make sure that I could understand what I was doing, because I'm not going to go in there and gamble if I don't understand what I have to understand why I'm putting my money where I'm putting my money. And I don't want to lose money. No one wants to lose money. All right. So I had to understand everything, or a high probability of where price is going, why it's going there, and how I could get in line with it so that I could make money. And I wasn't going to gamble. And ICT seems to be the only thing that, in my opinion, is not gambling. And then I have my funded accounts ready, but it's a small account, and I am profitable and making money. But again, it's a small funded account. This is unfortunate. But luckily I was given this opportunity. And so now I'm just trading past phase 1. I'm moving on to phase 2, and then continue. So would you say SMT divergence is currency divergence and RSI divergence is volume divergence? So, AMP pips, I don't actually trade volume. As you can see in any of my charts, I don't trade volume whatsoever. How's US 500 doing? Still pushing lower. Yeah, it's gonna carry on doing this. It's gonna carry on pushing lower and stuff until it's gold thing. Go look at the 1 minute in gold. It's just gonna carry on chopping and bouncing around because FOMC day. Gold from here, shift 1, shift 2. Could have taken a short there to go low to fill in this inefficiency. But no, that's not high probability for me. It's not the time I trade. So, as I said, AMP, I don't use volume at all. I don't look at volume. It's not something I've ever used because, well, I have tested it and I just never found that it was worth it. I just like looking at price as it is. Watching the candles paint back and forth. It's lots of fun. The biggest thing with trading is that you just have to put yourself in front of the charts and watch what it's doing. Literally watch price. Don't watch indicators. Don't watch anything else. Just watch what price is doing. Look where it's going to, why it's going there, what time of day it's going. All those things really, really matter. And the hardest thing that traders, I think, struggle with is the boredom of just looking at the charts. Okay, because you look at it and you get a bit bored or whatever it is. It's boring. It's really boring. So you have to enjoy looking at the charts. Find a way or try to just enjoy price action. Because it is actually, that's why I say when it makes a move and stuff, you look at it and you're just like, oh, that was beautiful. Look at that beautiful touch. Beautiful. It's coming into this volume imbalance right now that I said before. That fair value gap and that volume imbalance. Look what it's doing. It's just tapping it lightly, gently, and it's doing something. It's going up and down. That little movement. You learn to watch these minute movements and see what they're doing. It's not just the leg or the candles. It's how they're moving the specific candle itself in the 1 minute chart. Which way are they pushing? Why? Why are they doing it like that? And then you start understanding even further what's going on. What are some negative points about ICT? That's actually a good question. The negative points about ICT, I would say, is that it can be boring to listen to hundreds of hours of his talking. It can be very, very boring. But he's just speaking like we all speak to each other. And because he's been trading, look at that response from that volume imbalance. Look at that. So if you were using that as your trade, you could have literally taken from the middle of your volume imbalance again. What's 50% of that gap? Let's just eyeball it and say it's over here. Okay. You could literally just take, and Forex is the same as trading indices. From here, you can take a 1-to-1. 1-to-1. Done. You look at the previous imbalance over here, drawn through price on the DXY. You look at that, enter shorts in the middle, high, 1-to-1. Easy. Now, this little thing that I indicated in price right there, that little volume imbalance, just look at what's happening and tell me that yeah, I don't know. And that little volume imbalance, again, this has gone higher. So it's showing me that the euro right now is overextended. It's anyways. I just love it. Anyways, the negative things are that it can be really, really tiresome, A, and B, it takes a long time to understand. But eventually it just clicks and you're like, boop. And you start looking at it and you're like, oh my God, I kind of know what's happening. It's the funniest thing. And I would say another negative point is that if you don't know what you're doing and you don't have patience, don't use ICT tactics or strategies or methods until you know what you're doing. Or you're just going to burn. You're going to make lots of mistakes and then you're just going to hate ICT. So like I said, I spent two years kind of like looking at ICT concepts and I didn't understand a thing. It was, I think, maybe in October of last year that I just looked at the charts and then it clicked. I was like, everything just makes sense. Just makes sense. And all it was just understanding one thing. Where's the draw on liquidity? Like, where is the draw on liquidity? And then how do you spot the draw on liquidity? What time do you get the draw on liquidity? So every day we have, let's say, this right here is Asia session. Okay. Now we've come down and we've taken all of the liquidity on the sell side set up in Asia. Where's price most likely to go? Everyone that has a breakout trader, they're like, oh, there's a whole bunch of lows there. So what I'm going to do is I'm going to short this and then target the next low. But what does the algorithm do? No. It's like there's a whole bunch of liquidity resting up here. All of these highs are delicious juice. That's where all the money is. So we're going to take price to where the money is. That's how I literally look at it now. COT is something about ICT I couldn't get my head to wrap around. So COT or COT, commitment of traders, is the difference basically in interest rates between certain currencies. So if this is where Forex gets slightly more challenging than indices. Okay, indices is easy. You predict it, it goes exactly where you want it to go, whereas Euro did not go to that level because it's already gone there. But if you have to do that on a larger time frame, like the COT just gives you a general bias. As soon as you see the change in sentiment in the 3-month seasonality, so 3 months or 6 months, whatever it is, you see that there's a change in bias. You then know that there's a big move in play, and during that time, as the change is happening, there's going to be lots of consolidation of some kind, and this is reflected anyway. So if I go to the monthly, okay, right here, we have 1, 2, 3. All right, there were 1, 2, 3. So as soon as this happens, where are we? Monday, May 21. No, let's just go to like the January, June, July, August, September, October, November, December, Jan. Okay, 1, 2, 3. There's been a consolidation. You see the wicks and stuff with those candles there? Those 3 candles from December to February, just before March comes in, it's just consolidation. Up and down and up and down and up and down and up and down. Then the real move starts. 1, 2, 3. Sentiment's down. 1, 2, 3. Sentiment's down. 1, 2, 3. Sentiment has now shifted. Now we're 1, 2, 3. We're in a consolidation range. Again, you're using the power of 3, not just on the candles themselves, but you're also using the power of 3 in a sense is included in the seasonality. It's a really good It's a really good question. I like that. My thoughts on BTC. Okay, this is quite controversial. BTC. Let me go look at BTC. What's happening in the chart? Bitcoin for CME. Yeah, CME looks good. Let's go to the daily, where we're looking. Interesting. The daily, we've just filled in this liquidity void. That would have been a good target. Right down here, another liquidity void. Strange how his concepts work exactly the same. Void over here. Yeah, so looking at this, think about BTC. BTC is rocketing. Since when? It was coming down, created equal highs. Yes, that's amazing. And then it came down to fill in the void. Alright, filled in this void, and then jumped back up. Now I've created another void. So my thoughts on BTC is right now it's going up because people are very scared about the whole bank collapse. And where we're looking at the potential buy side for BTC. 35k? 34? Around-ish? Is there anything else? Imbalances and stuff all the way up and down this leg. I feel like these lows over here, like these ones over here, are a bit too even. But this is ICT model in that it's even at the bottom, it snaps it, and then it's pushing higher. But does it do the same thing? Let's look at past price on the daily. We have equal lows, it snaps it, and then starts making its way higher, leaving a void in place for it to use as a bounce mechanic. There's also BTC is interesting. I haven't actually done this analysis on BTC ever. That there would be an important piece of price, and this little section between here and here would be an important piece of price. Look at that. Wow. And it never sees that again. It just shoots off. Does it? Oh, that's fascinating. So possibly, like then you start delving into like the deeper parts. These voids need to be filled 2 times. Okay. So I'll just show you an example of this over here. This void goes in, it comes out, it doesn't go all the way, and then it comes in and it goes out, and then it comes down, and then it makes the move. So price has been rebalanced beautifully at that level to go higher. At this point, it hasn't been balanced, so like around 10k hasn't been balanced, and there's still a void in play down here. So we could be looking at both sides. You could be looking at all the way down here at like 10k, or you could be looking at price just going up because of the whole market narrative right now, which is banks are failing, therefore get your money out of fiat and chuck it into crypto. Larry, a trade manager doesn't break the prop firm rules because you are executing the trade manually. So it's not the same as if you were, yes, it is an expert advisor, but it's not the same expert advisor as like a copy trader? That's another good question. But obviously, read the rules on the prop firm, and if you have any questions, just ask the people in the chat. That it did come at the perfect time. Which money amount do you suggest from a funded account? 10k, 50, 100. I started 100k FTMO, but didn't pass. So I'm actually doing this myself, and that is taking a 10k and using the profits to then get to the next one. So I've actually got my FTMO 50k that I still need to trade. I've purchased it, that I used with the profits that I had from the 10k, and now this opportunity though came at about the same time that I actually opened the FTMO. And Stefan, yes, I am from South Africa. Do you hold a trade during news or close them? I don't trade during news. So I don't trade. Well, 8:30 news, I don't trade. And if it's like something like FOMC today, I wouldn't trade either. I just don't trade the whole day. Except for, yeah, I would have, yesterday would have been my last trade. I wouldn't have even traded London today. Untold stories. Can you give an example of how ICT works on live charts? You can go back and watch this again, and you'll see. It was actually this price action here on Euro, where price came up here, and I said price is going to go lower because it looks like it's snapping out. But because it's FOMC day, the moves are not consistent. So I was expecting price to come to these equal lows down here, but it didn't. But on US 500, if you're looking at the same time in price, it went exactly to where we expected. Then pulling out, closing the high time frame, pulling out the N dogs and the N wogs. Let's see how we're doing. We'll come back to fill the previous days, and we're heading from the 50%. What's between this one? Wait, is that little? Let me just remove the N dogs over here. Okay, and we go 50% between these two. Look at that resistance between this one over here and this one over here. Isn't that perfect? If you were trying to predict something and have a bias for the week, I mean, you know, anyways. Yeah, so that's already happened. Can you show how to use DXY SMT divergence with gold? I like I said, I don't trade gold. I've been kind of testing it, but it's not something that I trade. Even though I set the higher time frame for it, it's not a thing that I trade. But I am actually short gold because it's already taken on the larger time scale. It's taken both this liquidity and this liquidity, and it did it in one day. So I'm expecting price to come down in gold. And if gold's going down, then not. And with my bias of dollar going up, it works beautifully. PJ, not going for the millions. Eventually I'll go for the millions, but trading is not a one-day game. It's not a one-day game. Ali, I take 2 trades max, but if you look on the chart on the broker statement, it's a lot more, because what I have to do is I have to open multiple positions per trade because I take partials. So I don't just trade with like one stop and one take profit. I have partials. So I have lots of trades. There'll be like 4 trades on at one time, literally. And if I want to take 50% off, I'll then take 2 of those positions off. And then if I want to take 100%, or if I want to leave a runner, I'd let that happen as well. Good question. I'm in Australia, so I don't got no load shedding here, bruh. Hello, Alberto. Look at this range. No, this is the build up to FOMC. This is gonna come down. It's gonna come down hard. Alright. And you know what's funny? Is I'm actually gonna end the stream soon. Okay. And I know that you guys are gonna continue to watch your charts because you're all animals like me. People are predicting this is gonna go up 100 pips. Like I look at Euro and the only way it could go up 100 pips. 7, 8 to 880 to here. Like, yeah, even looking at this on the 1 hour, this liquidity has been built up and it snapped it and liquidity has been built up. If you see that anywhere else in price and time, okay, yeah, it goes up and it has been built, it's been built. These are this is a target, these lows. Let's get built, snaps it lower and is targeting down here. It's not there yet. Came right there. So you know the direction. There's a lot of downside liquidity right now. Sell side liquidity. Same could be said for buy side liquidity. We're looking up here, there's a lot of equal highs, but the thing is it's been rebalanced and it's gone down, down, down. Every single time I did this, it balanced, there's equals, left equals, but it's balanced. Is that in my high time frame? This high would be important. I just noticed something on the 15 minutes. Friday to Sunday over here. In the open, there's a little section of price action from the 27th of February on the buy side. It's just above this high. I'll be watching that if price is bullish. And that's the 27th of February to 22. Yeah. But anyways, if price does bust higher, it'll be fun to watch and see. But if not, that's okay. If you look at the GBP as well, there's a whole bunch of equal highs over here on the 1 hour. But if you see where we're here in price went here, yeah. At this time, over here, it's the same price as over here. That's SMT divergence, but if we look at this price over here, okay, Euro is stronger than GBP right now. Because GBP's come down and tested it. Whereas right now we're in an FVG as well on the 1 hour. Fascinating. Anyways, Euro, after building each one of these sections of too smooth price over here, it's gonna drop. It's gonna drop hard. It might seek buy side first, but it's gonna go down because there's too much deliciousness down there. There's too much money resting underneath these lows over here. Way too much. But that's like a long, long time. That's why, again, we have We have our daily higher time frame analysis, right? We have our beautiful higher time frame analysis. It hasn't come and taken buy side yet. With 1, 2, 3, 4, 5 blue candles. How often do you see 5 blue candles on the daily, or 5 red candles on the daily in a row? How often? That's another thing you need to look at. How many candles are there? And how often do you see those candles? So let's count the last big bear leg. 1, 2, 3, 4, 5. Oh, and then it shifted. Here we have 1, 2, 3, 4, 5. And then, oh, it shifted. Funny that. Blue, 1, 2, 3, 4. Big red candle. Just swipe everything. 1, 2, 3, 4, 5. We're on 5 now. So here we have blue, 1, 2, 3, 4, 5. That's just been balanced out. Below that, 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. So generally, if you're looking at the market the way I see it, this leg is either going to go into consolidation very soon and then retrace the other way, or it's just going to retrace. Because you don't see it often. Here might be an exception. 1, 2, 3, 4, 5, 6, 7 candles over here. Ooh. Yeah, 1, 2, 3, 4, 5, 6, 7, 8 candles over here. That's an exception. Yeah, so we have 1, 2, 3, 4, 5, 6, and then it starts going down. 1, 2, 3, 1, 2, 3, 4, 1, 2, 3, 1. Yeah. Anyways, that's another thing that you notice after lots of time looking at the charts, looking at the candles, looking at them on a daily. It's not candle counting. It's literally just, there's a high probability that after today that there will be some kind of bear day. So that's if FOMC it goes up, that's what I'm looking for. I'm looking for downwards momentum. Or it might be the wick. It might have wick into it to go lower. But I'll be expecting bearish momentum. And again, even on like this even on this where was that? Here. These massive things over here. Okay. Digger, what he's saying is that it's not the correlation between them, it's the correlation between them against the dollar. So I think if you do, that's a good point though. If you do what I say, the same thing where I have euro over here, so you have gold over here and you have silver underneath here, you might be able to find. That's a good thing. I'll actually look into that and see where we get with that. But yeah, my biggest advice is just learn to love trading, because if it's your job, normal people work 8 to 10 hours a day, and your job is to look at price. And if you don't love it, very hard to do something. Well, that's respect. Why here, you might ask? Why all these things over here bouncing up? Why that? You just look back in price and you're like, oh, what's that? like, oh, I see now. That was an IOE. That was an IOFED on the daily. Could have entered anywhere here for longs. Could just stop here and gone. That would have been the safest trade ever. But I don't trade the daily. Alright, everyone. I'm going to call it quits. You have a fantastic night, day, morning, whatever it is in your jurisdiction. Take care of yourselves. Be safe out there. Especially with the FOMC. You know, just remember that it's rough. Okay. If you have a small stop loss and you're risking a lot, they will somehow target it. And if you're on the wrong side of the markets, you can just completely blow your account. I've blown a lot of demos that way because I was trying to trade FOMC. That's why I don't trade it anymore. Better off just waiting. Trading the day before FOMC, or waiting, or trading afterwards. Seeing which direction they want to take it. But yeah, thanks for that advice, Digger. Appreciate it. I'll have a look at that. That's some really, really good advice. Comparing the SMT divergence between that. Man, this is dirty. Taken that low? Not yet. But on a larger time frame, you can see now that this has just swung. This is a market or it's not a market structure shift as of yet. We've broken down here. That would be considered. Let's look at the 5 minutes. Yeah. Lots of people would consider this to be a market structure shift. You can see it on all different time frames. The US 500, it did take the low. Because you have this, you have the up, you have the down, it's taken the low, and then what's going to happen? Cheers, brother. Appreciate it. But yeah, take care of yourselves, and I'll see you next week Monday. Hopefully I actually have my verification account and I can do some proper trades. And if not, then that's okay. We just wait for it. I'll be here. Cheers, everyone. Take care.